All right, good afternoon, everyone. This is Jamie Keach from Resource Insider, and you're listening to the Resource Insider podcast, the quarantined edition, because we are all still locked at home. And fortunately, during this time, I've been able to track down some very, very successful, very intelligent leaders in this space, and we're getting really their overview of what's going on right now in the mining sector and the world in general, and how they're managing the COVID crisis and the companies they're involved in. Today, I'm very excited to bring you Paul Matysek for a conversation. And I've been looking to get Paul on here for months now, so I'm excited to finally have a chance to sit down and talk to him. He is quite newly the CEO and chairman of the board of directors for GoldX Mining. And we're going to get into that in some more detail. For those of you who don't know Paul, he has been in and around and a leader in the mining industry for decades now. He has sold at least 5 companies that I'm familiar with. I think it's reached at least $2 billion in shareholder value. And he's done a lot of stuff. So we're going to talk to him about his plans for GoldX, his views on the industry, and a lot of other stuff. So Paul, thank you very much for coming in today and taking some time out of your day and your new job to chat with us.
Thanks, Jamie. It's a pleasure to have this opportunity.
So can I ask you, where have you holed up for quarantine in the days of COVID-19?
Well, I mean, right now in sunny Whistler, it's a resort town just about 90 kilometers north of Vancouver, nestled with a great view of Whistler Mountain and Blackcomb and the Wedge. And the resort normally at this time would be just full of people just after March break, and the village is boarded up. There's maybe 30 or 40 people walking the village, so it's quite astounding. This, and the only things that are open are essential services, pharmacies, grocery stores, and of course liquor stores. To quell this population here. So, no, it's quite unusual for this time of year, and quite an unusual event.
Yeah, I actually spent about a week up there about 10 days ago, and it was eerie walking around one of the most busy places in BC. You can barely move at this time of year, and to see it like that, it's just such a visceral example of the lack of industry going on right now. And I can't even imagine the hundreds of millions of dollars that the Whistler Village is losing at a time like this, between the stores and the lift tickets and the restaurants and everything. It's hard to think of an example better than that really shows what's the changes going on in the world.
Yeah, no, it's unprecedented times, and it has severe impacts, on the world, on the economy. I mean, we will get through this, but I think this event, it will change the social contract that businesses have with the world. And what can I say? Like, when hugs and kisses become like threats to your life, and when acts of love are not visiting your family and friends, and it's going to have profound impact. And I could see how we're going to work in the future, how we're going to deliver health in the future, how we're going to deliver education. These will all they'll be changed by this event.
I talked to Rob McEwen kind of extensively about this, and I'd be really interested, given your experience in the mining industry in so many different commodities and so many different parts of the world. What do you think the long-term impacts of this might be on the mining space? I mean, assuming in the short term there are going to be some mine shutdowns or some mines put on care and maintenance for a short or medium-term period, but once things are going again, do you see a big reshift of how we do things in this industry?
Yeah, there may be deglobalization. Security of supply will be most important to a lot of countries. There's going to be, for instance, if I just talk wholly on gold, with the amount of dollars that are being pumped, by these infrastructure, like I think the United States is going to put $6 trillion into the economy, and And, that's going to cause huge inflation. And with a lack of goods and services, that's going to cause a stagnation of all the economies that you just described and what's happening in Whistler. I mean, that's stagflation. And usually in those types of scenarios in the past, that's led to more demand for hard assets like gold. And so you can obviously there's going to be I most assuredly going to see an increase in gold prices. I don't know how high it will go, but I think gold will go to $2,500 before it goes to $1,000. Um, and I think that the mining industry will may have to like develop even a stronger, because we're all connected, social contract with how it does its business. And I think that it won't be just anymore on providing maximum value to shareholders, but how it provides that value. And there'll be a lot more social values and how we protect and educate communities that any mines are involved in. And I think there'll be a new different index on those types of activities by miners. So I think that when the world starts turning again, there'll be a huge demand for the base metals. And we will go back to work, and there will be some mines that don't make it during this period. But I do believe that the mining industry will probably be healthier as a result of this.
So, are some of those things you just mentioned, are they what inspired you to really step up and step into the CEO and chairman role of GoldX? And maybe you can give us a bit of a background of what brought you there and why you're in this company, what now?
Sure. I mean, most of as you mentioned earlier, the five exits and sales of public companies, it's more looking at the dynamics of the metal price of the commodity that I was looking at. Uh, it would be the size of the asset and what I can do with it, the optionality aspect, and the ability to put a team together to execute on a program. Uh, in this particular case, for GoldX, it's a relatively stable country in Guyana. It is a resource, a measured and indicated resource of 7+ million ounces, inferred resources, which could get converted potentially with higher gold prices or more exploration of over 3 million ounces. And there aren't too many places in the world that you can find 10 million ounces of open pitable gold. And so now it was just a matter of how to like look at this asset and how to get the most out of it. And the group that I've worked with before, we were approached by Frank and Grand Columbia, who were large shareholders, to look at what I could do to help unlock the shareholder values. And so we started off in November as a strategic advisor, and we did a number of moves, I think, that created that value. And one is we rebranded it from Sandspring to GoldX. We consolidated the shares 8-1. And then we actually made a debenture of $20 million to actually own the property 100%. This is the first time in the history of this project that the shareholders own 100% of this project.
Mm-hmm.
So that was really becoming familiar with the company and what we could do with it and how to right size it in terms of production. Where I saw some value is that, when you have, there was a PEA done in June of this year, 2019, I should say. And, it highlighted this asset is hugely leveraged to gold. And on a base case area at $1,300, it had an NPV of 495 million, an IRR of 20%, a payback around 2 years, so almost 9 years, and free cash flow of 1.25 billion. And the torque is at $1,500 gold. The NPV is 760 million. The IRR is 20, almost 28%. The payback's less than 2 years, and the free cash flow is $1.71 billion. So, and if you look at 18 and, $2,000 gold, the numbers get ridiculously crazy. And you're looking at a company I took it over, market cap with all these things of $50 million. So there's deep, value that needs to be unlocked there. And podcasts like this will help. We want to profile this project because I think it's been buried for many, many years. And so those are some of the reasons why I've joined this group.
So I think I'd like to drill into that. You mentioned the incredible leverage to gold that this project has, and for those listening at home, I guess the easiest way to look at that is, as gold price goes up, the value of the asset and thereby the value of the company goes up, hopefully exponentially. And is this something we see in common amongst all gold projects or all development projects, Paul? Or does GoldX have a specifically high leverage compared to your competitors out there, or compared to other options?
I haven't done the full analysis with all my peer group, but and that's what we're doing now. We're putting together slides for our website to look at how we stack up against our peer group, so you can see how value that we do show. But on right now we're trading like on a $7 per M&I resource ounce, okay, which is really, really low for any kind of factor that can do to evaluate companies. 15 would be low. That would be a doubling in price if we could just show that. So my job as a CEO is to actually point out that value to people and show how that value is feasible and consistent, okay, and provides a strength to our share price. The other thing that interested me in taking this job on is that because of its size, it can have production like in the 150 to 250,000 ounce range. And that's very attractive to mid-tier and top-tier companies that are looking to expand or be accretive to their portfolio. So that gives us optionality in terms of takeovers. Like the new norm for mid-tier and top-tier companies isn't the 1 million, 100,000 ounce a year projects. They're looking for 3 to 5 million ounces, and they're looking for 150 to 250. So we want to hit that sweet spot.
So looking at this from the outside, when I look at your resume, I see someone who has built a pretty unparalleled reputation in the ability to either start or come into a company, clean things up or build it up, and then transact on it and sell it very successfully at a premium. And I think you've done that 5 times. Correct me if I'm missing one, but you've done it in potash, You've done it in uranium, you've done it in lithium, you've done it in gold. There's probably other ones that are silver, I think, too. Can you give us the general characteristics of a project or a company that you look for that says, look, this has potential here. This could be a takeout project. This could be a takeout target if X, Y, Z are done and made it more attractive to a buyer. What is it you look for before you choose something that you want to be involved in and put your name behind?
So the big thing is a good understanding of the metal market, and to see if there is wind in the sails. Will this metal price increase over the next 2 or 3 years? Okay, are there events that shaping the metal price that are out there? So so price is one. Then in most cases, I have had different kind of scenarios, but for instance, the first time, my first and probably one of the largest takeouts was uranium, and that one was just out of the blue. That was just a belief that uranium at $10 was really, really undervalued. It was a sunset industry. People were going to shut down every nuclear reactor, and that was it for uranium. And that was 2004. I just didn't believe that. And I thought the world was still going to be relying heavily, especially the US, on nuclear power. And so I took a bet on that. And I joined up with a good partner of mine, Bill Sheriff, who had a databases uranium databases from US uranium companies, large ones. And from that, we were able to stake and acquire large, advanced uranium deposits. At the same time that was happening, we had the price of uranium slowly creep up from $10 to $20 to $30, then to $40, and our $5 million market cap company became 50, 100, 150, 200. And then just to add torque to that, we thought, okay, well, now that our share price was at a point where we could use it, we started acquiring companies instead of
Mm-hmm.
properties. And so I don't think anybody's done this, but I took over 3 public TSE, public listed companies in 1 year, and gained a huge bunch of mass and some advanced projects. And so that ended up taking us to like the 600, $700 million mark. And this time frame is like in 2 years, and it's just a constant focus to that. In the 3rd year, and we were looking at trying to expand because we were now the largest holder of uranium assets in the United States. And Cigar Lake decided to melt, and that shot the price of uranium to 70 to almost $100.
Mm-hmm.
And that event almost doubled our price in a day. I didn't anticipate that, but and then in that moment we used that moment to actually apply to the New York Stock Exchange and become listed there, so we get better distribution in the United States. And from then after that, I realized that when I was starting to look at $110 and $120 or much higher projections, I thought it was oversold. It was time to actually sell, and I managed to sell that to Uranium One. I think that was for $1.2 billion.
Right.
So in the course of 3 years, and 2 people around an idea, we grew to a company of almost 200, and sold it to Uranium One. And a lot of the assets that were distributed from Energy Metals became foundation blocks for other companies today that are still around. So it's just looking every day at the moment and the future and trying to make a decision. And a similar path, was done with potash. Again, a belief that potash, the Chinese were very interested in potash, and a similar story evolved, except this time I drilled. As my background as a geologist, we went to the Saskatchewan, which is the Saudi Arabia of potash, and we drilled the Prairie Vaporite Basin. We found 3 major holes, and then that was a story of executing with a team on getting a resource and getting a pre-feasibility, and the hardest of things, and is to getting a mining permit in that country. And so we did all those 3 in 3 years. Had lots of tension. It managed to get Robert Friedland became the chairman of my board, and he helped provide some potential Chinese customers. And I eventually sold that company to K+ Us, the largest, not the largest, but the oldest potash producer in the world. And they bought it for like $434 million. And they then subsequently spent over $3 billion. And now it's called the Legacy Mine. So, and it employs thousands of workers. So that's kind of the strategy that I use. And it's not, it's no magic. It's a lot of hard work and making a choice and being nimble. And it's just probably seeing what you see every day. I just happen to do it with companies and take a risk at it.
If I were to try to summarize that, it sounds to me like you've got a really strong macro view on what commodity is is going to be rising and where you should be. And then you go out and you find projects that have the ability to scale and to get a big, high class asset. But something I wanted to talk to you about, and what stands out to me about GoldX, is the fact that you've sort of put the band back together in terms of the team that you had with Lithium X. Frank Justra is one of the big backers, you as the chairman and CEO, whereas you were the executive chairman of Lithium X. Brian Pace Braga, who is now I believe, an advisor to the company and was the CEO of Lithium X, and of course your CFO, Bassam Mubarak. So you guys have all come back together one way or the other to do this. How important, is building that team that can execute on these, and why did you guys come together for this one again?
And from my view, this business has a lot of trust, and everybody has a role to play. I like working with people that have gone through the ups and downs. I can tell you that for every deal that I did in those 5, there was a dark day when we thought we would go the other way, that we would lose the plot, or the price would go. And in those moments, you start knowing who is with you and who will stay with you. And so it's good to form strong bonds and strong relationships, and capable people that will execute under pressure. And so I enjoy working. Each everyone of that group you just mentioned are capable people that and I find that the synergy of all of us working together is greater than just the 4 of us working individually. So it's a pleasure, and at the same time, I'm heartened that that they take the same approach that I do. And I'm a shareholder, and I have a reputation of being the last shareholder. When I buy shares in the company, I make a commitment to the shareholders that I will stay to the end. And I think that's the beauty of a CEO that has the shareholder in mind. I gain the most value, economic benefit by increasing the share value. And I think so that's near and dear to me. And so I'm aligned with my shareholder base. And I think so is Frank, and so is Bassam, and so is Brian. So we're all on that page on how we increase shareholder value. And I enjoy working with them.
So before you came in and you guys changed the name to GoldX, this project was known as Sandspring, and it had some good times and it had some harder times, but it did survive through an incredibly long and challenging bear market. For investors that have been in this company for a long time, and for those who are thinking of coming in for the first time, what can they expect out of your team, out of GoldX over the coming 6 months, over the coming year? What's on the table?
So the kinds of things that need to be done is trying to get our ounces to be sort of reclassified as developer ounces instead of explorer core ounces. And you can do that by producing a feasibility study. You can produce, we need a mining permit so that we can actually get these ounces out of the ground. We need to get more institutional investors. We need analytical coverage by analysts. So these are simple things that they're easy to roll off your tongue, but they all take a little work and they all need to get done. And so these are things that add value. And to be, get the majors and the mid-tier familiar with your property, on the value, on the all-in sustaining capital costs, what kind of leverage this would do for their companies. So all this is how you develop shareholder value in my mind. And, there's also the M&A route. Maybe this is the time that we know if our stock price gets bigger, that we become acquisitive. And, you have to also realize that we have a built-in shareholder called Grand Colombian that owns 20% of our company.
Mm-hmm.
So they're always around the periphery of a potential M&A. So, we have lots of optionality in this company. We have I think we have $6 million in the bank, and we don't. Most of my companies don't really have a high high number of people working for it. We're very, very focused. So, we tend to create a lot of shareholder value with very few people.
For those who've never heard of it before or thought about it, can you give some thoughts on what's going on in Guyana right now? And, is that a good place to be mining? Is that a place you want to be doing business? I know a lot of people have never even heard of Guyana before looking at a
Well,
project.
Guyana, not to be confused with Guinea, is in South America.
Yep.
It's a stable democracy with common legal law system, English speaking, easy to get around with. It's been fortunate. It's, I think, a population of I don't know, 700,000. Very small country, and sometimes sluggish in its economic performance. It relied, mostly upon mining, gold mining, artisanal gold mining. Not too many mines. I think Guyana Goldfields is one that has an existing mine there. Pura would be one of the largest deposits in that area in the country. But a couple of years ago, it made an incredible find offshore, and it's going to totally transform that country. It's probably going to be in terms of natural gas and oil, and it's going to become probably one of the fastest growing economies in the world. So, and Guyana, there's been commitments by the governments there, but they're going to put that money into infrastructure, and infrastructure is the heart for resource development. So I think this all bears well for our company.
Hey, I know you're a busy guy and you've got a lot on your plate, but one final question. There's a lot of people who listen to this podcast and a lot of people sitting at home who've seen their portfolios destroyed or at least hurt significantly over the last few weeks. There's a lot of people that are starting to understand the value of investing in gold and in gold mining and resources in general in a time like this. Do you have any thoughts for investors who've never entered this space for what they should be looking for and what they should be considering before dabbling in the mining or precious metals world?
Well, reading, becoming familiar with the gold mining industry, uh, um, look at different matrices, how people evaluate uh, companies. Look at analytical reports from big brokerage firms. Okay, education is the key. In my, I can tell you why you might want to do this one versus that one. Maybe find some trusted advisors who have worked with individuals or worked with companies and have familiarity. You can back the asset, you can back the jockey. I mean, these are two other things you might want to look at. Who's running the company? Is the company well financed? So what's the track record of these individuals that run it? So it's not an easy decision to be made. It depends on a lot on your risk level. I mean, mining is a speculative business. It's prone to boom and bust. Okay, so there's no surety in this game. Who knew that the price of gold can fluctuate from $1,200 to $1,700 in a given year.
Yeah.
So you have to have the stomach to do that. It's a place, it's like most metals. They have a cycle, and you just have to be cognizant of where you are in that cycle. I particularly think that we're in an upswing of that cycle. I think that the whole industry has been through a bear, like 5 or 6 years of bear conditions, and there's been a lot of rationalizations, a lot of mergers, and the best are surviving. So I think it's a better place today than it was like 4 or 5 years ago. So, and then it's your level of, of risk. You want to do an exploration company that's drilling up a geological model, or do you want to work with a development company that's trying to move to production, or do you want to look at a production company and maybe get the better leverage on an increase in gold price? So it's not such an easy question. It really comes down to your comfort level and having a little, I'm sure all your podcasts where you talking to Rob McEwen and He's a very bright man that you can listen to, and they have lots of insight. And you should listen to these podcasts and learn from them.
Yeah, well, thank you. And that's kind of what we're trying to do here at Resource Insider is really talk to the most experienced people in the space and give a broad view of how they manage their money and their portfolio and, of course, the companies they work with. So, Paul, thank you very much for taking some time out of your day, and best of luck with GoldX. Very excited to see what happens over the coming months.
Oh, thank you very much. Thank you. It was a pleasure.
All right, take care.